I've been a trader now for over 6 years, and I've learned a lot on this journey. There's been a lot of ups and downs. Although I'm very grateful for where I'm at today, I know that if I could turn back time, I would do certain things differently. So the purpose of this video is to discuss 3 of the things that I wish I knew when I started trading, because it would have made my journey so much easier. And hopefully by listening to this video till the end, you gain some perspective from it that could save you potentially years of frustration in your own trading journey. So with that being said, let's get right into it. I'm gonna list 3 of the things that I wish I knew when I started trading, and in no particular order. They're all very important topics in their own right, and there isn't one that's necessarily more important than the other. I think it depends on where you're at in your journey. So listen carefully and see which one applies to you. Maybe all of them will. So the first thing I wish somebody told me when I first started trading was that lower time frames are a trap. I know the immediate response to this whenever I say it is pushback, because you know a guy who knows a guy who knows a guy whose friend is a successful day trader. Now, I'm not saying day trading is impossible. It's definitely possible. I'm a successful day trader myself. I'm predominantly a swing trader, but I do have a portfolio for day trading as well, and I've done quite well on it over the years. However, it's not for everybody. I'm a firm believer that the vast majority of traders do not have the ability to successfully day trade. There's simply too much opportunity to get chopped up. There's too much room for human emotion to intervene. And in general, there's just too much room for error. Now, as I've said, over the course of the 6-year trading journey that I've been on, I've had a healthy mix of day trading and swing trading, or lower time frame versus higher time frame entries. And I still do both to this day. Now, although I'm profitable with both methodologies, there's a clear winner in terms of what gives me the most clarity, what allows me to have good mental health and reduced stress in my own personal life. And the clear winner there is, of course, higher time frame trading. Now, in my opinion, the main issue with lower time frame trading is that it's not sustainable long term, and it's also not scalable. Maybe you're a good day trader, but you have a $10,000 account. Well, have you thought about the issues that could arise when trading multiple 6 figures or even 7 figures? The process and methodology that you utilize on a $10,000 account, is that also applicable to a $1 million account? If you're trading with a 5-pip stop loss on a $1 million account, I mean, what is your position sizing going to be like? What's the slippage that you're going to incur from time to time? What kind of issues are you going to have with your broker if you're trading such huge volume on such a small scale? These are the kinds of things you need to ask yourself long term, because trading is not a short-term game. This is a career path, and it needs to be taken very seriously. All the traders that I've met in my life who have had great success have naturally gravitated towards higher time frame trading as time goes on. Maybe they started out with lower time frames, day trading, at the beginning of their journey, but as you gain experience in the market, you realize that stress and unpredictability is simply not worth it. I used to focus so much on getting these precision lower time frame entries, over refining until I got that sniper entry that we're all looking for. And honestly, as I mature in my trading career, I realized that the precision doesn't matter. I just want to get involved in good trades. I don't care how accurate the entry is. I don't care if I have 0.5 pips of drawdown or 15 pips of drawdown. I just want to get involved in the move that I'm confident is going to happen. At this point in my career, I'm very good at deciphering the bias in the market. Sometimes my entries are incorrect, but my bias is typically always right. Maybe that just comes with experience, or maybe it's just a natural intuition. I'm honestly not too sure. But if I'm confident in the direction of the market, then why not just get involved with the market? There's no sense in overanalyzing and over-refining on the lower time frames like the 5-minute or the 1-minute just to get that extra level of added precision. I would rather just stick to the higher time frames where there's not as much noise and it's a much clearer picture. And the fact is, it takes a lot less chart time this way too. Sometimes I only spend a few minutes a day checking the charts, being up to date with TradingView, checking open positions on my MetaTrader app, literally only a few minutes a day. And at the beginning of the week, I spend maybe 15, 20, 30 minutes just analyzing my watch list, looking for potential opportunities. And that leaves me so much free time to do literally whatever I want. Sometimes it doesn't even feel like I'm a trader, to be quite honest, because I'll just be like playing guitar or playing video games with my son or just anything. So I honestly wish somebody warned me about the lower time frames when I first got involved in trading. But when I was getting serious about trading, there seemed to be this trend about precision accuracy, getting the most sniper entry possible. And that led to developing a pretty unhealthy mindset, actually. We were being fed ads on social media about 1 to 100 trades, 1 to 200 trades, these kinds of things. That makes you feel like if you're getting like a 1 to 5 or a 1 to 3 risk to reward ratio trade, that you're not good enough for some reason, or that everybody's outdoing you. And in reality, that's just not how real trading works. Real professional traders are happy with a couple percent per month. Now, the next point that I want to discuss actually piggybacks off of the first one, and that is that less is more in trading. And there's actually a few ways that this applies. So less is more in terms of trade frequency. The less setups you take, the better your results will be. And I promise you that. Overtrading is one of the leading causes of new and even experienced traders blowing their capital and ruining their results, leading to a prolonged state of break even or drawdown. If you just simply focus on the best possible setups, naturally, you will take a lot less trades. There's a quote I heard recently just while scrolling through Instagram, and it was a trader who said, if you literally only focused on A+ setups, you'd already be rich by now. The majority of your losses are coming from you taking less than perfect setups. You should know your strategy. You should know your entry model. You should know your checklist of entry criteria. Every single one of those aspects needs to be met in order for it to be considered an A+ trade. Now, most traders, myself included from time to time, stray away from that. A lot of us lack the patience to just sit and wait for our perfect setup to present itself. Instead, we want to be constantly involved in the market so that we can honestly force results. But I've said it many times, the trading industry is not a place where you can force results. It just doesn't work like that. It's literally the industry where you need to work smarter and not harder. And I know that's counterintuitive to everything else in life. Like pretty much any job or career path that you take, if you want to do better, you have to work more to achieve better results. But when it comes to trading, you literally have to do less. If you try and work harder, you're just going to force things to happen. And it just doesn't work like that. The market is what the market is, and you can't force it to do things. If you come to your charts and you don't see your perfect A+ setup, simply walk away. Again, less is more. So less chart time means less trades and more profitability in the long run. The one caveat to this that I have to mention is that if you're a beginner, it's important to have chart time in terms of backtesting and forward testing, because this will help you understand the strategy that you're trading. You need to get those reps in, similar to working a muscle at the gym. You need to spend time on it until it becomes easier. But this process honestly doesn't take long. If you're a true beginner, it should only take a few months to really grasp a strategy, maybe less depending on your level of comprehension. But after that quick phase is over, that's when the less is more analogy applies. So just give this a try the next trading week before the market opens. Analyze your watch list, find some good setups, filter those setups down to the best setups, and then just choose one of them. And actually remain disciplined throughout the trading week and wait for that setup to occur. If it doesn't occur, that's okay. Just move on. Find some other hobbies in your personal life. Do some other stuff. Don't be glued to the screen like a loser, waiting for something to happen that isn't meant to be. Honestly, some of the best trades and some of the best months that I've ever had in trading have been when I've been the most busy outside of trading. If I'm traveling, or if I have other plans to attend to, or other projects that I'm working on. Those are the times when I have the best trading results, because I'm not sitting at the screen micromanaging and overanalyzing my trading decisions. So I want you to remember that less is more. Less trades, less chart time, less stress. Now, the reason I wish I knew this when I first started trading is because I actually owned and operated a construction company. I was a residential trim carpenter for about 10 years of my life, and I had a business in that niche, and it was great. I loved it. I was very happy working with my hands. I've always loved working with my hands. And although at times the business got stressful, it was still a good, physically active, mentally challenging thing to do. And I actually sold that business because I thought that it would be best to focus my full-time effort on trading. I don't regret making that decision because it allowed me to actually become a content creator too. Because the thing is, trading doesn't require much time. Like, there's truly not that much that goes into it. Once you see it for what it is, you realize how little time it actually takes and how little effort it takes too. And I think back on my decision to sell that company and I wonder why I didn't just make it work, because now I have so much free time. And I think to myself, well, I could be doing a number of things right now. I only spend like a few minutes a day checking the charts. So I could easily start another business if I wanted to. Maybe starting a business isn't what you want to do, but if you've been resenting your job, just maybe reconsider, because you actually don't need that much time to trade. You don't need to be glued to the screen thinking about it all day and night. That's not what's going to help you be a successful trader. What's going to help you be a successful trader is making better decisions. Like I said before, to reference that quote, if you literally just take A+ setups, you'll be a profitable trader. That's all there is to it. Broker-backed prop firms are an exciting new development in the trading space. After dealing with the drama and headaches of firms switching between brokers, back-end tech, and trading platforms, I'm relieved to start a new funding journey with a firm that stands out beyond the rest. Think Capital, backed by Think Markets with 15 years of experience in the trading space, is making a big impact with simple challenge configurations and easy to achieve targets. They accept US traders, offer balance-based drawdown, 8% profit target for phase 1, and 5% profit target for phase 2. You can even withdraw your funded profits directly to your Think Markets personal trading account. The best part is they're integrated with both TradingView and MetaTrader 5, so you can take your pick of which reliable platform you'd like to trade on. I'm very grateful to be able to partner with Think Capital to offer anyone watching this video a 15% discount by using my exclusive code. Head over to the description of the video to find the link and discount code to sign up today. Now, the last topic that I want to discuss. I wish somebody told me this when I first started trading. All strategies work. All of them. In fact, I could flip a coin and call heads or tails for buy or sell and have better results than most of you watching this right now. Just think about that for a second in terms of probabilities. It's more than possible. So why is it that most people fail? Everybody's always looking for some holy grail strategy. Some people think it's ICT. Some people think it's support and resistance. Some people think it's trend lines. The truth is, all of the things that I just mentioned work. So if you're a beginner watching this, I would recommend that you take a look at all of them and just simply see what resonates with you. Because literally every one of those strategies works. So maybe the way that I trade and the way that I teach doesn't resonate with you. And that's fine. Maybe you do better with support and resistance. Maybe you could go follow a trendline trader that teaches you how to trade that way, and maybe you'd be successful with that. I've been in this industry long enough now to see trends come and go. And by trends, I don't mean the way the market is trending. I mean the way that people trade and the way that they see the market. It seems like every week there's some new acronym describing some occurrence in the market that has already been around for decades. Everybody keeps trying to reinvent the wheel, but all the answers are already out there. You trying a new strategy isn't going to make you profitable. The main reason you're not profitable is because you're sabotaging yourself. If you think a strategy resonates with you and you're trading it for a long period of time, but then all of a sudden you incur a losing streak and decide that this strategy is no good anymore, I have to stop, I have to find something else, then I have some bad news to break to you. You're going to be unprofitable for a very long time because you're entering the cycle of doom and it's very hard to get out of. The truth is, in every strategy in existence, losing streaks occur. No trader is immune to losing streaks. No trader wins 100% of the time. It is just statistically impossible. So if this sounds like you, every time you lose a trade, you question everything and you think maybe I should try support and resistance, maybe I should try trend lines, maybe I should dive into thousands of hours of ICT content, then you're shooting yourself in the foot. So my advice to you is to, of course, vet the strategy that you're getting into. Like, you want to backtest it. You want to make sure that it's valid. You want to make sure that the person teaching it has some sort of credibility and level of comprehension in the market. But once you're aware of those things, and if the strategy resonates with you, then just stick to it. Losing streaks are inevitable, so don't fear them. As long as you're managing your risk accordingly, then you should survive any losing streak. Anyways, I don't want to ramble for too long, so I'm going to keep this video short and sweet, but I really hope you enjoyed this, and I hope that some of the things I discussed today opened your eyes to some new possibilities, because in the trading industry, there is an unlimited amount of possibilities. There's no one-size-fits-all. It's a very individual journey, and there's so many variables to success in trading. All I can do is provide content that hopefully provides value to you all, but at the end of the day, you need to figure out what works for you. You need to learn your own lessons, and hopefully just stick with it long enough to see the fruits of your labor. I hope you all enjoyed this video, and I'll talk to you all soon.